Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky. And I have Scott Redler on the line. He's chief strategist at T3 Live and T3 Trading Group. Scott, how you doing this morning?
Feeling good and ready to go. Another Monday.
Yeah, we've had some pretty good action since we spoke last week with the Fed, with the Quad Witch, and let's just go to Mr. Market here. Let's just go to your charts here and tell us what you're thinking about the indexes and perhaps what's in store for the market this week.
Well, in middle last week, we saw that the relative strength in the Russell and the mid caps and the bios kind of give you some clues that after Fed Day we would perhaps break above that 2086 or 2081 in the S&P, and then going into the end of the week, you had that nice push with option expiration. Some people think it was because of option expiration. I kind of think it was just because the market was stair stepping higher and was acting pretty well on all in a lot of different ways. So as I enter this week, looking at the trend of the S&P, it feels like we get one up day, one inside day, one up day, one inside day. So with today's futures being down 2 or 3 handles, I'm thinking, I listed a chart there with the spiders. I'd love to see the spiders hold above, to say 209 to 209.50, which is like $1 below. I don't even know if we'll see that. That would be a spot that I think could be a buy the dip type of trade. And if we hold that area for the next day or two, I would think that the probability gets raised of taking out that 211.27 and back to the 212 highs. So I want to see if we could digest above 209.50, and I think on the the SPX above 2100 or 2106, and I think that could pave the way for a little bit more upside action this week.
So as long as we just don't go right back down then, right? I mean, that you're just looking, not necessarily have to bolt today or tomorrow, but maybe if we could just hold up here at these elevated levers, it gives us a better chance of going back up or taking out the new all-time high.
Yeah, we've had a lot of choppy action, so you want to make sure, you want to measure the speed. And as an active trader, you have to have a threshold for pain. And if all of a sudden you start buying 209.50 in the spiders or 209, and it doesn't hold, chances are we can get choppier action, and then you have to sit in and figure out what's next. If it holds above 209, 209.50, then that could give some conviction that, we're not going to stay here too long, and we can get that momentum move to highs. So it all depends on your time frame. And for me, I had a pretty nice set of longs from Fed Day into Friday's close, and now I'm a little lighter, so I'd love to be able to sit here for a day or two, give you a little bit more of a platform to go from, and then see another nice trade and see what helps lead that during the process.
All right, let's talk about some high beta tech here, and I know you're getting some mixed signals. First, let's start with Apple. Big selling balance on Friday. I just, I can't understand why people would put those kind of orders out, but, Dennis made a good point about the liquidity, and you can get that amount of shares off on the close here. Big move last week. It had a red dog reversal to 122 level. Ran into trouble at 129 here. Now we're just kind of in the middle. Give us your take on Apple.
Well, I actually played that red dog reversal from the 122s up until about 127, and that's when I thought it might have some trouble, and it went all the way to 129.40. So a lot of people late last week was like, red dog, when are you getting back in? When are you getting back in? I'm like, give it a little space from 121 to 129. It's still in its range out process. So I do think I was hoping to see a little bit of a down open today to perhaps look for a red to green trade. But because it's up, I think, 60, 70 cents right now, I'll be a little bit more patient. But I think buying it close to 125, 126, I think it's good. That's what I'd like to do. I'd like to find an entry. If they can actually fade it real quick and can't bring it red and you could buy it versus a low, I think that's the way I'm going to try and re-enter it. I'm still in the camp that the highs of the year are not in for Apple, but I want to trade it tactically. And right now, right around the 126 area, which is pretty much the higher end of the halfway point between 121 and 129, I'd like to see that hold. If all of a sudden it goes red and doesn't hold 125, that'll create just a little slower type tape and a little choppier action there. So, which is not good at Apple. We like to see tight and fast movement. So I think if it holds in today, within a few inside days, it'll make another attempt to take out that 129.40 where it stalled last week.
Okay, let's move on here to some other high beta tech here. Alibaba. I mean, look at this thing, and yeah, you think it breaks up above 86, comes back down, closes below it. Have we finally resolved this trading range in Alibaba from 80 to 86?
I've really focused on it last week, and I thought it would trade better. And there was a quick trade. I remember, I think it was like Wednesday-ish when it was down, and it went from red to green, and you had a quick trade above 85.50, and then it hit like 87-ish and just stalled. And then on a strong day in the market Friday, it opened up a little bit, then closed on the lows. And I just think it can't be an over-focus anymore. It moved really well the first 4 to 6 weeks, like sometimes new issues do. And now it's just like, there are some small trades into support, but then once it hits these resistance areas, it's a sell. And momentum traders like to buy high and sell higher, and you haven't been able to do that in BABA for a long time. I would say maybe now that a lot of people are frustrated and not looking at it, there's a chance it moves a little bit better. So if you happen to be in it, I would say put your stop in around 84. And if you could hold 84 and go sideways, maybe there's another trade here above 87, which would take you back to the gap from, February. But I don't think there's a great setup here right now. But again, it's, maybe a little work over 84 and it could act better.
Baidu had a nice 2-day move, ran into some resistance at a familiar area. Now you're pulling back, had a big consolidation there at the 205 level. Pulling back here, is there an area where you get interested on the downside here? Maybe a fall back to Thursday's low at 210?
I think you just nailed it right there. Woke up on Wednesday, traded above 207, ignited. You had a good day, too. Some people might have even faded in on Friday as it was going into that 217 resistance. So if it could hold the top third, if it could hold 210 like today, just I don't know what it's doing pre-market, but if it were to go from red to green and start doing some work above 210-ish and not give the whole 3-day back, which it's been doing recently. If you look at the chart, it's been trapped in this descending channel ever since, from 250 all the way down to below 200. So at some point that might change, but it hasn't. So for it to change or start to change, I would think it would have to hold 210, and then holding that at some point, then it could take out that 216, 217 area.
Okay, let's go to the next issue. I know you're going to want to talk about it because you have been all over Facebook here. And Chris in the chat room wants to ask you about it. He says it's been a grinder lately. I don't know if this is a grinder looking chart. This looks like a straight up move to me. Set that all-time high on Friday. Are you still long Facebook? And would you be added to it or looking to take some profits?
I actually was in it the majority of last week. I remember when we talked, I was like, you know what? To his point, it was a bit of a grinder. It's been a grinder almost for 7-8 months in the big channel. So I was like, you know what? Let me see if I could buy some into the support, which is around 78-ish. And then it was like a great surprise when it cleared that 79.80 later in the week. All of a sudden, it got first gear when nobody was really looking at it, and it actually gave you a momentum breakout trade. They've been so hard to find in high beta or social, and you had a trade when it traded above 82.20. It closed well on that Thursday above it and give you follow through on Friday. So I did sell my Facebook into Friday just because it was up 1, 2, 3, 4 the sixth day, and I'm going to try and be a little cute. I'd like to buy it back. I don't even know if it'll get a retest of the 82, 20, 82.40, but if it could, pull in slowly to there, that would be a spot to buy back. And if it can't, then maybe it holds above Friday's low of 83. And if it can't go below there, then, it's probably going to keep moving as fast as it has been and create a high level flag. And then your pivot resistance is 84.60. So an inside day or two would go a long way if you feel comfortable getting a meaty position back. Otherwise, I'm just going to, kind of nickel and dime it where the 4 or 5 day big breakout move where you could have had some size. I think that was last week. Now you just sit along and go for the ride if you don't want to overtrade it, and if you could trade it actively like we try and do here and be a bit more precise, I would say a little bit closer to 83.
Was that just a target exit or just like, just too much too fast? What made you pull the trigger on the exit?
It's just more of my system. I like to buy day 1, add day 2, and I trim day 3, and usually by day 4-ish I'm out. and then it goes up to 6, 7, and 8, and I start crying that I had it earlier and I fell too early. But this one, the trade was, it came from the 77s. It busted through the 82, 82.20. So for me, close to 84, I'm like, I'm going to take some off. I wasn't sure what they wanted to do with the strikes, also with option expiration. I figured
point.
they might want to pull it back. They didn't pull it back that much at all. And, so it's kind of like a feel thing because I was like taking profits day 5. I held it for the majority of the time. Plus, it's just funny out there. There's so many guys that go against traders that call us a bunch of momentum monkeys or this or that. So I almost wanted to prove a point like, hey, we bought it on the dip. We bought it on the breakout. We're selling it into strength. We're not chasing it up here. Same way on Friday. Everyone was talking about the strength. Everyone getting all giddy on the bios. And I was like, I think it's a sell, definitely not an initiate. And if you could do it a tricky short, and all of a sudden the bios will sell the giddiness. So sometimes I try and sell the strength, and it could backfire on you because you get out and you don't find a way back in. So if you happen to be a swing trader and you're like, okay, I think the measured move on Facebook is to 90, then you might be able to sell it well at 84 on like Friday, but then you don't get back into it. And then all of a sudden you turn around and it's at 87, 88, 89, and you're left without the position. So you have to realize if you have the wherewithal to get back into it, if you're trying to play a cute middle by buying a dip and trying to book money in the middle.
Yeah, good points there as far as, getting into positions, getting out of positions, scaling in, scaling out. I notice if I traded larger positions and they go my way, it's usually the last couple lots that you hold on to that you get the best price on because you don't think about it. It's a smaller position. So great points there. Do you think Twitter has the same qualities here? I mean, I don't think it's quite as long. I mean, we talked about the consolidation in Facebook here, but you think Twitter might have that kind of giddy up and go too because it had to gap up after earnings, hit the $50 level right on the nose, pulled back. They've tried to bust this thing below 46, I don't know, 3, 4 times last week, a couple times the preceding week. I don't know, it's kind of one of those charts I look at and I'm saying, man, this thing won't go down and it's going to go up.
It's fundamentally rock solid as a Facebook or it's been around as long, but I do like the chart. It had that big gap up after earnings, had a little bit of follow through, like you said. The Bears all attacked it. They tried to get it into the gap, and it couldn't break below that 45. He actually had a nice red dog reversal on March 11th when it traded below 45.79 and came back above it. I was also long that the majority of last week. I'm still in options. I'm in the $48 options for this Friday and next Friday, thinking that if the market stays strong and happens to go, this could provide leadership. I'm also going to look to re-enter the stock. I put a stop in on Friday when I left, and I don't know why it was so tight, and I got stopped out of it just on the equity side, not the option. But I do think a little work above 48, and there could be some power. If you're looking for adding on momentum, I would say your first add on momentum would be a trade above 49.15, and then that 82.20 level, which is the level on Facebook. You have a very similar type momentum level, which is right at 50 in Twitter. If Twitter could break above 50 on heavy volume, I think we get a nice trade, with some follow through.
All right, let's go. Go back to the Fed speak a little bit from last week. The word patient was taken out, but the market didn't tank. Now the TLT has an interesting formation here coming up. Had the big sell-off into that Fed meeting. Now you got 3 tops here, right at the 131.50 to 131.70 level. Running into some trouble here. You also had trouble at 132 and change, 131.98 back in February 9th. Are you looking at this as perhaps a lower risk short here, or are you going to buy the daylights out of it going through 132?
I think the time to buy the daylights out of it was a little bit earlier, last week or so. I actually posted the chart. I think we spoke about the island reversal bottom that took place, on that overthrow move. If you look at the chart of the TLTs, you'll see that was a bit of an overthrow move down on March 6th down to that 123 area. Inside there, then that gap up. On that gap up, it trapped a lot of people on that overthrow move. Some people said, I'm out of it. It's going to break its intermediate trend. And same thing, for shorts who pressed, and then you had that gap up and it held 125.76. Within that range, that was probably your meaty long to buy the dip, and then when it cleared 128.20. So up here, right around 130, 170. I think it could fill that gap. There's a gap that gets filled to 133, but I wouldn't be initiating a new position that you're not committed to, into that. And I do think maybe you do get a cute short where you could get a red dog reversal up here, where maybe it puts, swishes into that gap and comes back below 130, 170, and then maybe you have a calculated short because, again, from 123 back to 132, it's a big move. And I wouldn't want to see, you just start a new long here because you might have to deal with a little bit, of a retracement from that area. I'd rather see if it pulls into 128.20 and holds that. That could be, you buy the dip. And if you're looking for a cute short, maybe on that, that gap fill, I think I actually like that idea as a low risk short into that area.
All right, I got a tough one for you. I'm sure you probably never traded it. Bloomin' Brands Incorporated, BLMN. Rob Hood in the chat is taking a look at it. Perhaps he was looking at that breakout above 25 here. You had, 4 or 5 highs in a row, just under 25. Now you're not firmly above 25. You closed right there. Is this one where, you're looking at for the hold this 25, maybe give it a little room down to 24.82? I mean, kind of a tight chart, a lot of consolidation periods. Could you give us a take on Bloomin' Brands, BLMN?
Yeah, you could say it's definitely a stronger stock. It's trended well since the gap back in November. It did do. It tried to break out, like you said, above 125 and quickly wasn't ready. I don't quite see. Some people would say maybe if it doesn't get back above 25.50 in the rolls, you could see some kind of head and shoulders type formation forming here. Where you have the left shoulder, the head goes in, and the neckline would be 24, but that's too early to tell. I would say just looking at it with a quick take. If you want to be long it and you like it, it could be long verse 24.28, which would be support. Also, that's a moving average moving up. And if it's going to start to get to go again, shorts would probably get squeezed if it starts to close back above 25.50, 25.75.
One final stock for you here. I know you like to do your swing trading, your longer term trading, your scalping, and your news trading. And Gilead Sciences is in the news today. Deaths of a few patients on their drugs. Big spike down in pre-market. Is this one you have a thesis on this one for today, or when there's this much news out on something, you just let the big boys battle it out and trade another day?
So there are a lot of guys in my firm that trade the news because there's volume, there's action, there's levels, which is a hard thing to do, and it's especially hard when it's a bio. I've tried to trade Gilead from time to time, and the last time I actually lost money, I was thinking it could break above 105, and just because of these type of things trade with news, I bought options because I don't like to hold overnight just because of something like this happening. I know you pay some premium, but when they go, they cover their premium. At this point, where's it trading right now? Because I see the 200-day close to 96. I know when I walked in this morning it was at 93, and when I walked out of my morning call, it already took back half.
It's hugging 100, Scott. 99.88. Just got over 100 in the last bracket. Now you're failing at 100. Got a gap to fill up to yesterday's low at 101.70. Believe it or not, the pre-market low was way down at 92.41.
Yeah, so, some people who are believers in it, sometimes, if you're a believer and you do your work and you know your data points and you know over emotion, maybe some guys bought it, that, because when I came in this morning in my office at 6:30, people were talking about it. It was a scoop. Here, back at 100, it's probably not on sale, so to speak, but it's actually showing some resilience that it's absorbing that news. So I think if it happens to go green and hangs in there, chances are this huge, channel type pattern that it's in since August at some point might be resolved higher, because if you get news like this and it gets bought, it's showing you that it's still under accumulation. If it happened to have been down 10, stayed down 10, and there was not a buyer in sight, that news would have meant more. But because it's back in 100, I think people are taking it in stride.
We've had Scott Redler on the line. He's the chief strategist at T3 Live and T3 Trading Group. Guys, if you like hearing Scott's daily take on the market as well as key levels, you can subscribe to the Redler All Access and get Scott's morning note, private Twitter feed, and daily video. You can call 1-888 1-888-998-3548. Again, that's 1-888-998-3548, and mention the promo code REDDOG for $101 off the regular price. There's also a link in the chat room as well as that number again if you wanted to get access to that. Scott, thank you so much for joining us this morning. We always love having you to kick off our week on Mondays.
Thanks for having me. Good luck trading today.